The greatest macro trader alive just dumped Meta, NVIDIA, Palantir, and ARM, four of the hottest AI stocks on the planet. Then he nearly quadrupled his Alphabet position and doubled Amazon. Stanley Druckenmiller doesn't make random moves. When he repositions this aggressively, the market eventually follows. Here's what he's telling us. Druckenmiller's Duquesne family office filed its Q4 2025 13 F4.5 billion across 62 positions with a 43% turnover rate. That means he reshuffled nearly half his entire portfolio in a single quarter. That's not rebalancing. That's a thesis change. The biggest increase, Alphabet, up 277%. He added $89 million in Google shares. Amazon up 92%, adding $63 million. Both are AI infrastructure spenders. But unlike Meta, they have dominant non-AI businesses that generate cash regardless of whether AI pays off immediately. His largest new buy by dollar amount, the Financial Select Sector ETF, XLF. That's a bet on banks and financials. He also opened new positions in Alcoa, Bloom Energy, Delta Airlines, Lattice Semiconductor, and Entegris, cyclicals, industrials, energy, semis. This is a portfolio that's rotating away from pure AI hype and toward the real economy. And his fourth largest holding is now the Invesco S&P 500 equal weight ETF, a direct bet that the Magnificent Seven are overweight and the rest of the market catches up. Now the sells, because this is where the signal gets loud. He completely exited Meta Platforms. Gone. He had just opened the position in Q3, 1 quarter and out, while Bill Ackman was loading $1.7 billion into Meta. Druckenmiller was dumping it entirely. Two of the smartest investors alive, opposite sides of the same trade. He also exited ARM Holdings, Sandisk, Seagate, Citigroup, and EQT. He trimmed Taiwan Semi, Natera, Insmed, Teva, and Woodward. The pattern: he sold NVIDIA earlier in 2024. He sold Palantir in early 2025. He sold Broadcom and Microsoft in Q3. Now Meta and ARM are gone. Druckenmiller has systematically exited every mega-cap AI infrastructure and chip stock over the past 18 months. He's not bearish on AI, he's bearish on the valuations. So what's Druckenmiller actually saying with these moves? Three things. One, the Magnificent Seven trade is over. The equal weight S&P 500 ETF is a direct anti-concentration bet. He thinks the market leaders are collectively priced for perfection and due to underperform. Apple still trades at 27 times earnings on nearly flat revenue growth. NVIDIA is at 20+ times sales. The froth hasn't fully corrected. Two, the real economy is underpriced. Banks, airlines, aluminum, energy infrastructure, semiconductors, these are the sectors that benefit from rate cuts, industrial reshoring, and infrastructure spending. Druckenmiller is positioning for a world where capital rotates from digital hype back into physical assets and services. Three, healthcare is the anchor. Natera remains his top holding at nearly 13% of the portfolio. Insmed and Teva are still top 5. These are cash flow heavy, patent-protected businesses that perform regardless of macro conditions. Stability at the core, cyclical bets on the edges. So what's the chaos capital take? Druckenmiller has never had a losing year. His track record across 4 decades of macro trading is arguably unmatched. When he exits an entire sector systematically over 18 months, that's not profit-taking. That's a macro call. The call is clear. AI valuations have peaked. The rotation into cyclics, financials, and the real economy is underway. And the equal weight S&P 500 is the clearest expression of that bet. The other 493 stocks finally getting their turn. You don't have to copy him, but when the greatest trader alive tells you where the puck is going, you'd better at least look. Bill Ackman is loading Meta. Druckenmiller just dumped it. Ray Dalio cut it by 46%. 3 billionaires, 1 stock, 3 different answers. Welcome to 2026. The capital markets are chaos. Embrace it, and I'll see you in the next video.